In this video, I'll be sharing with you two proven swing trading strategies that work very well in the market about 90% of the time. I'm going to go into the detail, the step-by-step process, and the exact method you should use to enter your trade, risk reward ratio, everything in this very video. So watch the video gradually all the way to the very end. In this video, I'll be going through what is swing trading, swing range trading, swing wave trading, and swing trading strategy. So I'll be covering all of these in this very video. What is swing trading? Swing trading is a trading strategy where traders hold position for several days or weeks to capitalize on expected impulsive price movement. And this is very important. If you put this into perspective and you come to this very price action right here, you discover that from this very point, market move upward, and then we have retracement, market move upward, we have retracement, market move upward, and the market come back down. One thing very important here is in this period of retracement right here, how are we very sure that this is the end of retracement at this very point and that market is going to begin to move upward from here so that we can take a position, in this case a buy position, all the way to the upside and then collect profit and the market retrace again? How are we very sure that from this very point market is going to from here move all the way to the upside so that we can enter a buy position all the way to the upside? That is what swing trading is all about, and this is very, very important. That means if you can figure out the end of retracement when you want to trade impulsive trading, that is swing trading, you figure out end of retracement, it will give you opportunity to ride massive trend all the way to the upside. You ride massive trend all the way to the upside, and that is what I want to break down step by step in this very video. So the first thing we have to consider is we have to look at some concepts about swing trading which you need to understand, and the first one is this very swing range trading, okay, which is very important. If you look at it, when you are on price action, let's say price action is moving in a range, which is very important. Market move down and then move upward, market move down, move upward, market come back down and come back upward. From this very movement, you discover that market has been ranging, okay, between two horizontal boundaries. So we call this resistance and we call this area support, which means this very point right here is a swing, okay. The first thing is you identify a swing in the market. This is a swing right at this very area. This is another swing at this very point. This is another swing right here. This is another swing right at this very point. So market move swing up and swing down, okay. And this is very important in a ranging market. So in the ranging market, we don't have swing high and swing low. We only have swing up and swing down. What that means is if you want to trade a ranging market, you have to understand or figure out where the market ends. That is when this movement to the downside here ends, so that you can take a buy here for market to move upward, a buy position right here for market to move upward, and a buy position at this very point for market to move upward. The same thing if you want to take a sell, you have to figure out when this very movement have ended so that you take a sell for market to come back down, or you take a sell right here for market to come back down as well. And this is very important. So this is the first concept you must have to understand when it comes to swing trading. So the third thing here is the swing wave trading. This swing wave trading is very important because that is the one I would like us to trade because it's very simple and easy to figure out. So the first thing here is the wave trading. Wave can be in uptrend or downtrend, okay. So let's say market is moving upward, which is very, very important. Market move upward and then come back down and move up again, impulsive move, come back down, move up, impulsive move, come back down, and move another impulse. What this means is, if you notice, market move, we have this very swing high, okay, and then swing low, which is very important. Retracement, we have another swing high right here and then swing low. anytime market moves swing high, a new high is created, and when market go down, a low is created. Okay, so in this formation we can say market move swing high, swing low, swing high, swing low. So in this very formation for an uptrending market, we see market move swing high, swing low, swing high, swing low, swing high, swing low, swing high, and then market swing low. So what we want to do here is to take advantage of this very area when the swing low ends, so that we can ride this very impulsive move all the way to the upside for profit in a buy position. And the other way around is for the market coming all the way to the downside. Let's say, for example, market is coming all the way to the downside, impulsive move retracement, market move impulse, retracement, market move impulse. The same thing happened here when it comes to market coming all the way to the downside. And if you notice, market from here come back down. This is a swing right here, but a swing low. And then in this very case, this is swing high. This one right here is swing low because market created a low and then market created a high here. So this is swing high and this is a swing low as well. So this is very, very important. So what you need to understand here is that in this very formation, this very impulsive move created a low in the case of a downtrend, and we have retracement at this very point, which creates a high. So at the end of this retracement is where we want to enter a position for market to come all the way to the downside, and market come back down, retrace again, or you can call it correction. And then at this very point, we want to figure out that the market have ended retracement so that we can enter the next impulsive move all the way to the downside. And like I defined earlier, swing trading can take days or week depending on what you're looking at and also your price target. So this is very, very important concept that you must have to understand when it comes to swing trading. It can be a little bit difficult to figure out when retracement have ended in this very case and also in this very case on price action, but I'm going to give you a tip that will guide you through the process of knowing exactly when it ends 90% of the time, so that from this very point you can ride massive trend all the way to the upside. And this is what I use, like I mentioned earlier. So what you need to do to get this accurately is to first of all use an indicator. You have to impute an indicator. In this very case, I am using the stochastic RSI indicator. So you go to the indicator section right here and you choose this very indicator. And when you choose this very indicator, come to this very area right here and come to the setting. Your own will be default, and change this setting to 5. Okay, change K right here to 5. Once you change it to 5, it will appear like this, and then you bring it down a little bit. And another thing we can also do on this indicator is to increase the visibility so that we can see what we are doing on price action. Okay, so I will increase the visibility a little bit so that it will be very visible for us to see on price action. So now that the indicator is on this very price action and we can see it clearly, I can now show you exactly what to do. So from this very area, you see market move from this very point all the way to the upside, and then we can see this is a retracement. Okay, now for us to confirm that retracement have ended in the market, we want to use this very stochastic RSI indicator to figure out when retracement have ended in the market. And for you to do that, you have to allow the stochastic indicator, this very line, to come into the oversold condition. Now, if you don't know how to use the stochastic RSI indicator, there is a video I will drop right here that will show you how to do that perfectly at the end of this very video. And when the stochastic RSI come into oversold condition at this very point, we want to allow it to come out. Okay, once it come out of the oversold condition, then we want to figure out the candlestick pattern that appear within this very area. And not only that, we want to figure out the last bear candle that appear, and then ensure that our next bullish candle close above it. Very important. These are the two things, okay, two proven method that you need to pay attention to. First thing is the stochastic RSI have to enter into the oversold condition for a buy. Remember, market is moving upward, and then retracement. When it enter into this very oversold condition. Once it come out, then we want to figure out the last bear candle. In this very case, this is the last bear candle right at this very point. Okay, now once that is noticed, we want to ensure that the next bullish candle should close above this very bear candle at this very area. Now, if you notice, this very candle closed exactly the same point, so we need to wait for the next candle to form, and this very candle right here close above this very last bear candle at this very area. Once we figure that out, then it is time to take a trade. We can now guarantee 90% that this very retracement have ended right here, and that the market is going to from here move all the way to the upside, and that is when you should take a buy position. So in this very case, if you want to take a buy position, you take your long position too, and you put it right here, that is at the close of this very second bullish candle at this very point, and your stop loss obviously should be slightly below this very support area right here, okay, to give the trade a buffer should in case market come back down again, and your take profit target should be 2 times your risks at this very point. Okay, once you do that, you're going to get it accurately. And if you notice, if you enter the trade this very way, you discover that market should hit your target accurately and perfectly, and that is very, very important. And the next example right here is this very area. If you notice, market move all the way to the downside. After market move upward, we see another retracement coming into the market. At this very point, you discover that the stochastic RSI was at this very area, okay, and market have not really entered into the oversold condition and have not even come out, so you will not consider this area end of retracement. Why others are jumping into trade at this very point, you relax yourself, because that is not what you are looking at in the market, okay? And we see that market come back down again, and from this very point we can now say that this is the end of retracement right here using this methodology. And the first thing I say you should look out for is that this should enter into oversold condition, and coming out of the oversold condition with this very blue line on top of the orange line. And the next thing we want to look at is the last bearish candle. When the market was coming all the way to the downside at this very point, the last bearish candle is this very candle right at this very point. And this very bullish candle closed above this very bear candle. What that means is we can take a trade from this very area all the way to the upside, and we are going to hit our target. So if I take my long position too from this very point, and at this very area, after the close of this very bullish candle that close above this very bearish candle, this is where I want to enter my trade, okay? And of course, my stop loss have to be slightly below this very support level, and my take profit target have to be 2 times my risks. If you do it this way, you should be in the right direction of the market, and this is very important. These are the 2 technique, proven technique. 90% of the time it will work for you in an uptrending market, and you have to define that your trend is moving all the way to the upside. If you look at this very price action, market has been coming all the way to the downside, and you can see that market move from this very point all the way to this very area, and then we see this movement upward. Market move, impulsive move, retracement, impulsive move. You can take advantage of this very impulse movement on your price action and take trade exactly when the retracement have ended to ride the next impulse all the way to the downside by the same strategy. If you look at it at this very point where the market enter into overbought condition for a sell position, you have to confirm that market enter into overbought condition right here on this very indicator, and at the same time you look at this very area, okay, and at this very point we want to see that the candle close below the last bullish candle, and the last bullish candle is this very candle right at this very point. So market move with 3 candles before we see that very close below it, and as at that time this very orange line was now on top of this very blue line, which means that market is going to come all the way to the downside, and that is when we want to take our short position to the downside. So that means we take our short position to from this very point and enter the trade immediately after the close of this very 3rd bearish candle right here, and our stop loss have to be slightly above this very line of resistance, and we look for 1 to 2 risk reward ratio. It is called that you should have that 1 to 2 risk reward ratio with this very strategy. The same thing play out right at this very point. When you trade like this, it will make you look for something very specific in the market. Look at it right here. Market move from this point all the way to this very area. Now, for you looking at this very strategy, people may be taking trade from here for market to come back down, but you need to relax to see these two things play out on your price action. And the first thing is this very point right here. We did not see this very indicator coming out of this very area of overbought condition. This was the point we see that occur when market was coming back down. And if you look at this very area, it is called that the last bullish candle here is this very bullish candle right here, and this very bear candle close below this very bullish candle at this very point of resistance. That is when we want to take our trade. And not only that, it is called that there is a crossover right at this very point for the market to come back all the way to the downside. That is only when you should take your short position to from this very point and mark out your trade, and your stop loss should be slightly above this very area of resistance, this very spike area, and then your take profit target have to be 2 times your risk at this very point. Once you do this, you should be in the right direction of the market. Either you are taking a long position or a short position, depending on buying or selling the market. This is very important, and this is how you can trade swing trading using this very proven strategy and scale your profit all the way to the upside using these 2 techniques that I just show you in this very video. So a quick recap of this very video. You know what swing trading mean, you know what swing range trading mean, you know what swing wave for uptrend and downtrend mean, and swing trading strategy and technique using these 2 approach will give you the right time that retracement or correction have ended for you to ride massive trend all the way to the upside. Consider supporting this channel by leaving a like for this video, subscribe right now, and turn on the bell notification for more forex videos like this one. Also check the channel for other forex content. Join our Telegram channel, link in the description of this very video, and also in the pinned comment for more day trading signal and technical analysis. If you want to watch my other video on the channel that will help you greatly, check this video out. It's going to help you greatly, and check this video out as well. It's going to help you too. Thanks for your support, and I will see you in the next video.